Do you want to know what the things the underwriter is going to look at when they're reviewing your application? This is the second part of this series, and this time we're going to talk about employment. Okay. Now, employment is very critical as it relates to you being able to purchase the home. What the bank wants to do is what the bank wants to see is consistency in your employment. Now, one of the big myths that you hear all the time is that you have to have been on one job for 2 years. That's just not true. What we're looking at is a 2-year work history. We want to see that over the last 2 years, you have been consistently getting up and going to work. One exception to that is that if you're a full-time student can count as 1 year previous employment, as a sidebar. So the biggest thing is when you borrow money from the bank just wants to see that you're going to pay us back. And one of the indicators of us being able to conclude that you're going to pay us back is being able to see the consistency in the employment. We don't want to see you jumping around a lot with different jobs. Now, if you're doing things that are putting you in a better position, that absolutely makes sense. You're not pigeonholed where you can't change careers and you can't change jobs. The biggest thing is that we want to see the consistency. It's okay if you've had a couple of different jobs over a couple of year period, but you can't have 6 or 7 jobs over the last 8 or 9 months, because what it does is it doesn't lead to consistency in your income. Same thing. If you're self-employed, we still want to see the 2-year history. A lot of self-employed folks really get scared when it comes to the mortgage process, right? It's no different than if you're a regular wage earner or if you're self-employed. The bank is going to want to see that 2-year history of employment. The one thing that's going to help you is that always understand that there's 2 sides to each equation. There's your side of it where you want to come in and borrow the money. And hey, you have this job. This is what you have now. This is what you make. You feel confident that you can do it. And that's great. It's no problem. But you have to also understand the bank side of it. Many times the bank is lending $2, $3, $4, $500,000 or more to you to be able to purchase that home. And at the end of the day, the bank wants to know that that money is going to be paid back and is going to be paid back on time. So when we're looking at your loan application and evaluating the likelihood of you continuing to be able to make that payment on time, the big thing we're going to look at is that employment history. You want to do yourself a favor and make sure that that employment history is as strong as you can possibly get it, right? Make sure that you're consistent in going to work. Make sure that when you're moving around jobs, you're putting yourself in a better position. And we can be able to look at your loan application and see that you have stability in your employment. If you have questions or you want more content like this, please like and subscribe. Drop any comments below. And thank you. You have a good rest of your day. If you're purchasing a home and you're getting ready to do your loan application, one of the things the underwriter is going to look at are your assets. Okay, here's the deal. I get the question a lot. How much money do I need to show? What type of assets do I need to have in order to purchase a home? Well, that's going to be different for everybody, right? Each person that's out here even looking at this content right now is likely going to be in a different scenario. Some of you are going to go zero down, like you're eligible for like a VA loan if you're a veteran, or a USDA loan if you're buying in a rural area. Some of you may be going conventional where you have to put down at least 3%, or FHA 3.5%, or some of you may even qualify for a down payment assistance loan where you don't need a down payment on that product either. So every situation is going to be different as it relates to how much money you need to have for the transaction. But understand this, when the bank is looking at your assets, whenever you apply, we're always going to ask for at least 60 days of your bank statement. We want to see your Roth IRA. We want to see your 401k. We want to see your investment accounts. We want to be able to see whatever assets that you do have, that you're properly managing those assets. We want to see that when your paycheck comes in each month into your bank account, if it's $5,000 a month, we don't want to see $5,500 going out, right? We want to make sure that you're managing the nickels that you have in an appropriate and a responsible manner. But being able to know exactly or having a set number of how much you're going to need for the transaction, it's going to be a case-by-case scenario depending on your particular situation. Again, are you going to do your own down payment? or is there some program that's out there that may be able to help you? Are you going to have to pay your own closing costs, or are you going to be able to negotiate where the seller pays the closing costs? Are you going to have to pay your own buyer's agent commission, or are you going to be able to negotiate for the seller to pay that as well? So those are just different things that in the beginning is really hard to be able to know exactly which lane you're going to fall into to be able to nail down exactly how much money you're going to need up front. But what I would encourage you to do is if you know that you want to purchase a home, you need to save every nickel that you possibly can save. You want to get on track ahead of time of tightening that belt so that you know that, hey, I want to purchase this home. I know that I'm going to need some money in order to make it happen. Well, my suggestion would be try to save anywhere from 3 to 6%, of what you think you may have to get. Now, that money could be in a savings account. That money could be something that you can get a gift from a family. That money could be, in an IRA or a 401k, things that you can pull money out without penalty to be able to purchase a home. Getting to your mortgage professional, someone like me, as soon as you possibly can, even when you're thinking about it, it would allow us to be able to tell you exactly what you may need. So again, if you qualify for a zero down loan, you're not going to need as much assets as if you qualify for something that you're going to need, 3 or 4 or 5% down. So the quicker you get with your mortgage professional, even if it's a year or more before you know that you're actually ready to buy, what it allows us to do to be able to look at your financial picture, look at your assets, look at what options are available for you, then we can give you a better idea of how much you may have to get saved for the transaction. It's always a good thing to be able to save, because then worst case scenario, when you get to the point to buy, if you don't need the money, now you've already have a jump start on your emergency account, or your rainy day money, just to be able to give you a little bit more comfort level as it relates to purchasing a home. So assets, no set number, but you do want to be as diligent and as aggressive you can, if possible, as far as saving, because you will need some money for that mortgage transaction. Get with your mortgage professional as soon as you possibly can, even when you in the infancy stages about purchasing a home, just so that you can have a better idea based off your situation and what you may qualify for, so that you have a better idea of how much you may have to save. And again, start aggressively saving, because worst case scenario, if you don't need the money, you've already built yourself a nest egg. Now, if you have additional questions on things like this as it relates to purchasing a home, saving, finances, etc., please drop a comment. Please like and subscribe so you get notified about additional content like this. And you have a great rest of your day.